Aisha Faridi, and I've got Sajid Mangat right here. We are counting down to an all-time high on the Nifty, but before that, a historic moment for Indian sports, and Ahmedabad has been officially confirmed as the host city for 2030 Commonwealth Games, marking the centenary edition of this global spectacle and India's return to the event since Delhi 2010. The announcement ratified last evening at the Commonwealth Sport General Assembly in Glasgow edges out competition from Abuja, from Nigeria, and of course underscores India's rising ambition as a multi-sport powerhouse. So on that note, let's talk about what the market setup is, because that also seems to be quite in the celebratory mode, must I add. And, you know, Conviction India, that sentiment seems to be returning. I mean, look at the screen yesterday. While, of course, we had that support from the global markets, which we have today as well, the global markets have managed to rally for a fourth consecutive day. That's Wall Street in particular. So holding out very well, and that is somewhere setting the stage for our markets as well. What happened in our markets yesterday was, of course, nothing short of magical. I mean, even if you were to pluck out the Bharti block deal, it was still a good buy figure from the FIIs. That said, yes, we're just a whisker away from the all-time high on the Nifty.
Yeah, and I think we're going to test levels close to it, and I'm a little circumspect whether it we'll going to cross it or not, and that's the reason being that yesterday's rally was mainly led by Reliance, Infosys, and HDFC Bank, and these three were leading the rally, and that led to the Nifty crossing 26,200. If you look at the broader market and how the broader market, or within the Nifty components itself, there are many stocks which are still down 20-30%. So there is no broad backup coming in for this rally. The Nifty is almost at close to an all-time high. The Nifty Bank is at an all-time high, led by one or two banks, which is mainly HDFC Bank, which is there. But there is a lot of factors which are now playing in with for the broader market for this rally to sustain, and that's something Aisha, will have to watch closely, because fund wise or flow wise we don't have that momentum backing this rally. It's only coming for new paper and block deals and IPOs which the fund is coming in. Domestic markets are holding on to the current levels and holding, and that's creating a time correction for the market as well, which is there. So it's going to be a little tricky, I would say, and you have a Sensex expiry coming in today, so towards the end we're going to see some kind of activity or volatility in some of the banking shares which is there.
Sure, but I feel, as the global markets go in for the Thanksgiving holidays, which the US would from tomorrow, and the global markets volumes as well, closer to the holiday season, are going to dry up. Once we do take that all-time high, or at least even get close to that, that's when you'll see further short covering and broadening of the market. Early signs of which happened yesterday, wherein you had the breadth of the market, across the board participation, almost 1,500 names going up. That was, one sign and glimmer of hope that perhaps when the global markets die out for the holidays, it would be India outperformance that would, come to the fore once again.
So we saw short covering happening yesterday in many of the stocks, and the frontline stocks happening. Even in the Nifty, if you look at, the open interest was up nearly 2,000 odd crores. We entered the December series on a very lighter note, as we said, but now we are gaining some traction with respect to some of the shorts getting covered. So yes, this rally of yesterday took some of the positions out with respect to shorts, but we are but we still have, from an index point of view, a long position of nearly 17%. So nearly 83% shorts are still there in the market, there in this market. So we are not sitting on a very heavy long positions, but there are indications which of market sustaining. And as you said, you have Thursday's Thanksgiving and maybe a Friday muted market for US. So next 4 or 5 days is going to be something, a lull for internet and global cues which is coming in. So you're going to see investors also being cautious, taking up a long position going into the weekend long period actually.
Yeah. But well, the US equity markets have been doing very well. In the run up to the Thanksgiving holidays, the US markets rallied once again. And in fact, they've had the best 4 day stretch in the past, since May, in fact. The Dow managed to eke out gains of about almost 0.6%. You had the S&P as well holding up higher, and the Nasdaq almost closing in on a solid 1% of a move. In fact, the small cap Russell 2000 as well gained, and that also gained in tandem with the Nasdaq, about an 0.8% move coming in there. The dollar index, that fell. The 10-year 2 traded below that 4% mark and close to VIX now dropping to about almost 17, 19 odd. Crude futures, though, they've moved higher by about almost 1 odd percent or so. Traders are waiting clarity in terms of what the supply is going to be. While we talk Russia-Ukraine truce and peace deal, hope of rate cuts, benign macros, global equity cues, and some short squeeze clearly seem to be setting the stage for India, right? But let's talk about the global markets. We've got Andrew Freris joining in on the show right now from Ecognisis. Andrew, hi, good morning. Great to have you on the show. Andrew, I guess a lot of moving parts when it comes to US equities. Right now, it seems they're quite okay, not really, second guessing what the Fed is going to do. We've had a decent patch in the run up to the Thanksgiving holidays. Do you think that will hold the momentum in the markets?
Not really, actually, because in addition to what the Fed may or may not do, we have data, and the data we have had were slight data, not a great deal. A few things about the hiring and firing in the labor market, consumer confidence, which is absolutely low, it has really tanked, and also the brown book of the Fed that points out that consumer spending, except of the higher reaches of the consumer sector, remains very weak. So the Fed doesn't have any more information on inflation. The numbers we had on inflation so far, and they are only up to September, are all of them with a number 3 in front of them. Wow, the Fed's supposed to have a target for 2. And these are the CPI, it is the core CPI, and the PCE index, personal consumer expenditure. All of them are going up rather than down, or at the very best are staying flat. So the Fed has a weak economy and a strong inflationary pressures in the market. So what do? They'll have to choose the weaker economy, where we have had some worsening information. And therefore, very likely they will cut interest rates, but not on the basis of strong inflation data. Very awkward. I can hardly think that this is a good time to take up on board that the cut in interest rates reflects anything good about the economy. It doesn't. On the contrary, it reflects a weakening in the economy. It's as simple as that.
So, Andrew, how much of a rate cut are you penciling in going into next year or early next year?
Yeah, I wish I could offer anything about penciling. In general, I avoid, like the plague, making suggestions as to what the Fed may or may not do, because that's not my business. My business is to say it's very likely that the Fed will cut, and that's a bad idea, full stop. Now, how much they might be going on forward will depend completely what inflation is doing.
And how do you see?
From my point, inflation is not quite well.
So, how do you see the entire markets now reacting? Because 80% chance Fed rate cut coming in is already factored in by the markets. Do you see the US markets and Asian markets to be in a range here, or this rally is going to be is going to go forward with tech-led pricing, which is there, which anyways is in overbought region now?
Look at my white hair. In my 56 years in the market, I have never seen markets pricing in anything. This is complete nonsense. Oh, the markets have priced that in. No, they don't. They think it's going to be something, they get it, and they react in a completely different way. So I suspect that if the Fed cuts interest rates in December, the markets are not going to take it in a welcome mood. It's as simple as that. Why? Because it signifies a weaker economy, and therefore it signifies weaker earnings, and therefore it does not signify good news. I know it sounds completely crazy. If the Fed was to increase interest rates, this would not have signified a better economy. It would have signified higher inflation. So either way, it would have been bad news. But never mind what I think. I have been telling my clients, keep out of US stocks. Full stop. Stick to Asia. Very important. Okay, very good, strong performances, and stick also to the European Union. All of them have massively outperformed the S&P. This is crazy. If at the beginning of the year I told my clients buy a lot of S&P, they would have underperformed very strong sectors like the Euro stocks, like South Korea, like Taiwan, like China of all places, and of course Hong Kong of all places. They would have outperformed, meaning downperformed it.
Understood. Andrew, great to have you on the show. Thank you so much for your time today. Okay, let's move on. Let's talk about what's really happening when it comes to, the gift nifty right now, and where is that settling in? Let's just bring up the implied open and tell you what sort of momentum we're anticipating, at least at the pre-open rates, and to start off trade. 50 points higher, 26,380 for the Nifty futures. The Gift Nifty currently around the 26,430 level in trade. But that said, a lot of takeaways, Ajit, coming in from the cabinet meet last evening as well. And finally, seems like India is going to be getting Atmanirbhar for rare earth as well.
That's true. Over 7,000 crores plan of spread over next 4 to 5 years. It lays down the roadmap for how to India's, if you look at from a rare earth point of view, we have enough resources, but we don't do much of a processing. So that's what the ecosystem is now going to build in, that, you're going to build that entire thing into play. And rare earths, which were earlier limited to only public sector companies, will be opened up to private sector for mining and processing. So the rules for these will come in, going forward. But it's a good sign that we are now looking at becoming self-reliant with respect to rare earth and the derivatives of that, whether it's magnets or any other minerals which we need for various other purposes.
Oh, yeah, absolutely. In fact, let's take a very quick break. We'll analyze the impact on which companies tend to get impacted because of the cabinet decision on rare earth. And of course, we'll talk about all the other stocks and news as well this morning, but that on the other side of this very quick break.